Hello guys, welcome back to the channel. In today's video, I am breaking down all my last week profitable trades. Sit back and relax and enjoy the video. Based on this my last week trade history, the first trade recap will be on this gold trade. The whole analysis started from 2 hours time frame. On this 2 hours, price maintained a bullish trend up to this point that nearly break this last significant high. Since I don't want to trade against this uptrend that the price maintained, then the question is, where will this price pull back to for it to maintain this uptrend? Based on simple market structure, this low is the last low the price must not break for this uptrend to continue. So, I selected the area as my point of interest for price to pull back to it. I know some traders will want to consider this area for price to pull back to take a long or break it to look for sell. Based on the fact that is the last significant low, some traders might even select this last low. But one candle pull back might be the information you need to identify the last low based on market structure rule. For you to understand my point, let us take the price back to this area. This is a mini downtrend if we try to ignore the whole price movement here for simplicity. When the price got here, it pulled back with just a candle then break the low with just a candle, which means price moved from here to this place representing the big red candle. Then a one candle pull back representing this green candle. Then a break of the low representing this red candle. If you understand candlestick formation properly, we'll be on the same page that the green candle pullback is the one that extend to this high. So, for no single reason, this price must not break this last high for price to maintain this downtrend. Price moved and broke the high, which is a change of character for an uptrend resumption. Same thing happened here and the uptrend resumed. Same this happened here. Here again, this place too, and so much more. That doesn't mean you have to be selecting it all the time in all chart. There's nothing 100% in Forex trading. Just understand the concept and backtest it properly to know how to go about everything. When the area was selected as point of interest, I switched to 5-minute time frame for the validation of the point of interest selected. Price gradually pulled back to the point of interest, validate it by moving rapidly to break the last high. Then I placed a pending order on the demand that sponsored the breaking of the high. Price pulled back to triggered it. 1 to 6 risk to reward was target as the take profit, and it got hit after some minute. Moving on to the next, GBP/USD. The whole analysis started from 15-minute time frame. A supply was introduced which lead to a rapid movement of price to the downside. The supply area was identified, and price pulled back gradually to the area. The supply shows its validity by pushing the price down to some extent. So, it doesn't have the strength to push it lower to this very low. At this point, price gathered some bullish strength to invalidate the supply in question. But, for a supply to fail, there must be a demand somewhere that invalidated it, and vice versa. Due to this demand that invalidated the supply was selected as a point of interest for price to pull back to it. I switched to 5-minute time frame, and price gradually pulled back to the point of interest in concern. Validate the point of interest by breaking this last high. If you are asking why this is the last high, then you've not been following the video. When this high got broken, a pending order was placed with a stop loss for price to pull back to it. Price pulled back and the order got triggered. Within few minutes, 1 to 5 risk to reward ratio was achieved. This last profitable trade was the trade I posted on the short videos this last weekend. The whole analysis started from 8 hours time frame. Price maintained a downtrend to this point, gathered momentum, and break this one candle pullback high. This shows a change of character. Price pull back to some point, then continue the uptrend movement till this major swing high got broken. When this happened, I selected these two areas as my first point of interest for price to pull back to it. Since this is 8 hours time frame, I can't just switch to lower time frame to look for entry on this 8 hours point of interest. So, I need either of these 8 hours point of interest to provide another point of interest on a time frame lower than 8 hours time frame. Due to this, I switched to 15-minute to validate 8 hours point of interest. The first point of interest got violated and the price moved gradually to the second. The second point of interest proved its validity due to the rapid price movement to the upside when the price got there. When this happened, the demand that sponsored the rapid movement on this 15-minute time frame was selected as a new point of interest to look for entry. I switched to the 5-minute time frame. Price pulled back to the 15-minute point of interest, broke this high, and a pending order was placed. Within short period, order triggered and price moved as expected.